here's Jeremy's vegan food chart, okay? That's food consumption of like vegan, like meatless products and things like that. Yeah, it's just gonna go up and up over the next 10 years. There's no doubt in my mind. More and more people are starting to replace some meals with some of these products, and I just see it growing like crazy over the next 10 years. Now, my spec stocks have to have very key things. If I'm gonna invest in a company like this very good food company, they has to have 4 key things for me to want to put my money and risk my money. It has to have huge TAM opportunity, like we're talking about. The category the company's going after has to be massive, okay? Can't be like a niche category. And if I look at this company, the very good food company, and why I'm so excited about this stock, it has not 1, not 2, not 3, but all 4 of these key categories, okay?
Should you speculate on Oatly OTLY stock like financial education Jeremy did a year ago? Financial disaster Jeremy bought Oatly OTLY stock at $4 on May 29, 2022.
So we used to buy 4 to 6 gallons of cow milk basically every single week. Now we buy 0 gallons of cow milk, and we buy 5 to 7 of the cartons of Oatly each week, okay? When it comes to Oatly, this is the stock I want to buy the most shares of for the remainder of this year. There's no stock in the entire stock market that I want to add more shares more aggressively than Oatly. I want Oatly to be a top 3 position, if not a top 2 position by the end of this year. And when I say long term, actually, I mean within this year. So Oatly, I'm not slowing down on buying this one anytime soon. I'm just going to continue to load up on shares for that one for a while. I mean, it's at $4 here today. I'll buy the stock all the way up to 10.
And sold it at $1.69 recently. That's another over 60% loss.
So the stock I sold here today was, unfortunately, Oatly. This ain't no jokely. So I held 18,000 shares in the public account in regards to Oatly. And it wasn't some huge position for me. Obviously, you can do the math on 18,000 shares at the stock price it is, right? And so it wasn't some type of like epic loss for me. But, I didn't really want to take an L on this one, and we had to take an L on this one.
Did he ever learn from his GoPro mistake back in the day?
Yes, I'm embarrassed to be a shareholder of this company. You're not disappointed, embarrassed.
And why listening to finance YouTubers could potentially be the worst decision of your life. I'm not kidding.
It's nothing short of embarrassing. And I do not have time or patience for these companies.
Oatly my moatly, this business has a big problem. It has no moat, basically. We don't even see these products in our local grocery stores. But I drink my oat milk every single day, just not from Oatly. There's 15 brands of oat milk in Walmart. What makes Oatly so special? Some say Oatly is the next tattooed chef that is doomed to go bankrupt. In this video, I want to find out if that is true. Of course, Jeremy also called Oatly the next monster beverage.
When it came to Monster, it was all about marketing. At the end of the day, they sold an energy drink. It's the same flip and flapjack and energy drink everybody else sells. And what Monster understood was marketing. And when I see Oatly, I see a company that understands marketing.
Just like he said, Tattooed Chef TTCF stock is the next monster beverage stock. Which one is it, Jeremy? It can't be TTCF now, because it has a little Q at the end. It went bankrupt for the CEO. Sam Galletti is scamming his shareholders. Should you speculate on Oatly OTLY stock like Jeremy did? I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you are a good boy, go to Audacious, moneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit, like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you? Oatly Group has a negative free cash flow of negative $450 million, which means it's currently losing money fast. It only has a current cash runway of 2 months. If the management don't turn this ship around, it will have to take on more debt or diluting shareholders' value. For a drink company, you would think they have better gross margins. It's sitting at 19%, which is bad, because a lot of their oat milk is mixed with filtered water as a base ingredient. The balance sheet is pretty bad. They have about $300 million in cash, but they have more than $600 million of total debt. Basically, they have twice the amount of debt than cash. Current ratio is under 1. Tattooed Chef had a current ratio of 1, and they went bankrupt. Just based on they don't make any money, and they have more debt than cash, I won't touch it because in this market, it's an unnecessary risk to get into a business that doesn't make money. John Christoph Flatten, Oatly CEO, commented, "In the second quarter, we continue to make progress towards our goal of achieving profitable growth in 2024. As expected, we continued our sequential improvement of gross margin and increased our advertising investments to continue to fuel growth. However, as Asia has transitioned to a post-pandemic era, consumers have behaved differently than we had originally expected, and we need to adjust. We have initiated a comprehensive improvement plan that will enable our Asia business to adapt to the evolving environment and strengthen the core business before building a significantly bigger business. We have also taken actions to further simplify our corporate functions and America's segment overhead, which will lead to additional cost savings as well as increased focus and agility. While we are reducing our 2023 sales guidance, we continue to expect to achieve our fourth quarter gross margin target of the high 20%, and we remain on track for achieving positive adjusted EBITDA in 2024. In my opinion, when the company is unprofitable and management is unproven, CEO can say whatever they want. It doesn't mean the things they're confident about is going to happen. It doesn't mean anything until they back it up with numbers. Sure, they promise gross margin of high 20s. That's still very poor performance. Honest Company already has 28% gross margin today. Honest has a current ratio of 3, much better than Oatly. Oatly is a Swedish oat milk manufacturer. Dairy is a $300 billion a year industry. Then there's almond milk, which is like a $5 billion a year industry. Then there's oat milk, which is like $500 million a year industry. Oatly takes about 0.25% shares of that market. So you see, this is very niche product in terms of what are they selling. Don't get me wrong, I love drinking oat milk. It's much creamier than almond milk. However, you can see why Oatly has no moat. no brand loyalty. Most people buy whatever milk is on sale with high inflation times. So as the gasoline prices rise, consumer package manufacturer company is going to suffer because we have just been through that in 2022. Another thing is that Oatly itself were having trouble manufacturing their own milk. That's basically why they have such poor gross margin, because they have challenges at their facility, which they don't even manufacture their own oat milk. They contract the process out to another manufacturer and they take a cut. So it's not a good situation. Then you add on top of their margin is totally depends on the commodity price of oats, which is hard to predict, just like any commodity. You have a situation the management literally has less control over. Food and drinks is the last place I think companies have pricing power. Consider, for example, Tattooed Chef in the plant-based food market. Their prices have become so low and their gross margin has turned negative and they went bankrupt. Dairy industry is massively subsidized in America. Like you already might think milk is expensive. It's paid by the government just to get to that price level. It's crazy. This is a Swedish company that has market worldwide. I think for American investor, you are at a disadvantage to understand fully about this business compared to European. If you decide to speculate on Oatly, a company that is losing money, you obviously are in it for the long term, for the growth story. However, there isn't much growth for a niche product. You would want to see explosive growth. Even if you take out foreign currency adjustments, their company on average worldwide only grew revenues by about 16%. This quarter, they only grew 11%. As the revenue becomes larger, the growth rate slows down. We already can see that. Tattooed Chef literally just stopped growing after 60 million a quarter. You can't have a growth story without putting out the impressive numbers. If you don't have a positive net income in this market, 11% growth, that's not good at all. This is a company that needs funding. It still feels like a startup. Oat milk is a niche product and it's limited by oat prices and your competitors from regular cow milk, soy, and almond milk. People in Asia love their soy milk. That's why they can't penetrate that market, because it's actually a Chinese, Korean tradition to drink soy milk for part of their traditional breakfast. I would not even speculate this company at all, to be completely honest with you. I already have an honest company to worry about, and I don't need more unprofitable company in my portfolio today. I think it's a risky company. It could potentially go out of business, as the stock price could fall below $1 and get delisted by NASDAQ like the chef. I am sorry if you bought it, because of Jeremy compared it with Monster beverage and tricked you into thinking you might get 100x opportunity with a drink company like Monster. You are such a good boy for watching my video right till the end. Bye.